We had a lot of interesting economic data out yesterday.
Right.
So let's get Ben Castleman here on set to talk about the data we've been seeing, because it looks like the recovery is starting to firm. It's getting better.
Hey, we'll take some good news when we can get it, right, on a non-jobs Friday morning.
Right. So what's the best real data point, non-data point that we saw?
Well, you know, it's still jobs. We've seen new claims for unemployment trending down now for several weeks. This is a good indication that next Friday we will see some good news there. Right. We saw some good.
How much over the past? Because sometimes the claims figure and the jobs figure usually correlate. But we've, over the past year or two, seen a lot of times where they just go in different directions and fool people.
Well, I mean, so claims only give us one side of the market, right? They tell us whether or not people are losing their jobs. They don't tell us that people are finding jobs. But, a year ago, if you think back, we were starting to see some signs of improvement in the job market, at least on the unemployment rate. Claims never really fell.
Right.
And that was an indication that maybe this wasn't as real as we had hoped. Maybe this was people leaving the job market rather than people finding jobs. Now we're actually seeing claims trend down. That's a good sign. We've seen something like 900,000 jobs created over the course of the last 5 months. That's not nearly close enough to get us to where we need to go, but it's certainly forward progress. Job market clearly is getting healthier.
Right. What are some other signs that this recovery might be more real than we saw at the beginning of last year? We've got a segment on later on the show right after you actually that talks about retail investors still very nervous. What are some signs besides what you just mentioned that might indicate this is for real?
So we've seen good manufacturing numbers. Yesterday's ISM report wasn't great, but it was clearly still positive.
And that was the ISM for manufacturing.
For manufacturing, we see services on Monday. Right. We've seen really, really strong auto sales yesterday.
That was an interesting counterpoint, I thought, to the ISM figure, because the market was expecting sort of seasonally adjusted an annual rate of 14.1 to 14.4
which would have been pretty good
million.
even right there.
That would have been great compared to the 12 million, and instead it came in at
15.1.
Right, it was a blowout figure.
Oh, totally blowout. And the really important thing here, we've been waiting for a moment when the economy could survive even kind of a negative shock, right? We keep getting this point where we get going and then we get knocked back. We get going, we get knocked back. We've seen oil prices...
Which is probably why individual investors, as we're going to be talking about Joe Light in a little bit,
are still so nervous.
Yeah, exactly. They just sort of go, oh, I'm not so sure about this.
So what we've been waiting for is kind of that moment when we feel like we can go forward even if there is something negative. And we've seen that the last couple of weeks. We've seen oil prices up, we've seen gas prices up, and yet consumer confidence has stayed strong. Auto sales were good, retail sales came in well. There's some sign there that this is an economy that can withstand at least that kind of mild shock.
And not to play on retail investors' fears, but what kind of things could derail this?
Well, of course, you're going to go right now, not to play the fears, but
let's not get ahead of ourselves. That's right. No, I mean, it's true. Oil prices could still continue to go up. I mean, especially we had, at the close of the market yesterday, we had that Saudi scare. Not really clear what's happening there, but oil prices jumped on that.
Right.
A real spike in oil prices could be a huge problem. Europe, it looks calmer now, but there's no guarantee that continues. And if you look down the end of the year, we have a lot of fiscal shocks on the horizon in the U.S. We have the potential of tax increases. We have the potential of spending cuts. If it looks like those are going to happen and people start to get nervous about that, that could have an effect as well.
So final question for you then, that is, the other person who's not so convinced about this seems to be Ben Bernanke. What do you think, sum up in a nutshell, why is he still worried?
Bernanke's real concern, I mean, he last couple of days was testifying. He was saying, things seem to be showing a little sign of improvement, but I'm not getting excited about it yet. One big concern they have is whether or not consumer spending is sustainable, whether or not incomes have been high enough to support that. We got some data yesterday that suggests the savings rate has been stronger than we had initially thought. That's a good sign. It suggests that consumers will have some base to build on. But clearly, I mean, let's be clear, the unemployment rate is high. Incomes have not been rising quickly. Consumer spending has been hesitant, and there's reason to think it could fall back, especially if we get negative news.
All right, so it's better, but not going gangbusters yet.
Let's not get ahead of ourselves.
Right.
That's
All right, Ben, thank you very much.
Thanks so much.